Hi everyone, welcome back to Talent Order's Breakfast Briefing, Friday, 1st of May 2020. This week I'm joined by Gaby Glasener-Cipollone, ex-executive partner at IBM, and we'll be focusing on her views and the effect COVID-19 is having on businesses. Gaby, thank you so much for joining me this week. Really appreciate you taking the time to give your insights on the impact of COVID-19. As I think we can all appreciate, it's been a tricky one for everyone. So before I go into any questions, could you give the audience a little bit of a background on your career history?
Yeah, sure. Thank you for having me. It's very exciting to be here. I have worked all my life as a consultant, to be honest. As you rightfully say, most recently for IBM as a senior partner for business transformation. Also, most of my life, I've been working in financial services, coming from operational productivity improvement, target operating model work, this kind of thing. And now having worked at IBM, really getting into the innovative technology side of life, like artificial intelligence, blockchain, robotics, big data analytics. And it's just amazing to see how these new technologies can help companies on very many ways to improve not just operations, but also from a strategic side in terms of the business models and the underlying strategic decision making. So it is a very exciting time for organizations at the moment. In general, now with the corona crisis, obviously, that provides its own challenge, but I think we see to that later.
Lovely. All right. Well, thank you for that. So my first question really is, how do you think COVID-19 has affected multinational organizations?
Yeah, it's interesting that you say that, because from the big organizations, we have seen kind of a development in their point of view. Originally, when the crisis started in February, they were, I don't want to say relaxed, but they had kind of three solid perspectives. First of all, they said, it's not us. We are not to be blamed. So they felt that they could play more the role of innocent victims, deserving support, rather than being the authors of their own fate. And second, you have to say that most companies actually went into the crisis in pretty solid shape. Also, employment was quite high, order books were full. So everybody, as I said, took kind of not a relaxed view, but a cautious view. And in the third point was that although the crisis started building up in February, they could already see that China was starting to tentatively reopen some factories and lifting some of its lockdown measures. And everybody felt, well, this is a V-shaped recovery, or, worse, a U-shaped recovery, but it's not really life and death. So unfortunately, in March this year, this has changed drastically when most of the European countries and America immediately began to impose the social distancing and thereafter the lockdowns. And that basically brought most of the economy to a halt. And we saw a very severe decline in output. We saw a high risk of layoffs and furloughs. What we see at the moment is that more than 50% of the world GDP is in lockdown. So this collapse in commercial activity is really much more serious than previous recessions have been. Now, the other thing that we saw, and what the virus did, although it was targeting, some industries more seriously than others, we could see that the problems cascaded through the domestic payment chains. So, for example, H&M and other retailers, they were asking for rent holidays, and that would hurt commercial property firms. So it started somewhere with some companies, some types of organization, and it moved all the way through the supply chains. Italy's lockdown basically disrupted everything from moving back to forth, and many countries were really struggling with their supply chains because of factory closures and border controls. So what we're seeing is a commercial problem at a global level. And we also could see that multinational companies were affected by that in various ways. So initially, what happened, obviously, all companies had to comply by government rules. So the moment social distancing and lockdowns came up, they moved their workforce to work from home as much as possible. They started to looking at their supply chains and try to make the right decisions. Also, senior leaders try to broadcast positive messages to staff and the public. And also, interestingly, we saw a lot of companies signing up for public service. So we said perfume production companies starting to distill hand sanitizer, for example, or we see automotive companies starting to make ventilators. You know, Alibaba started to distribute masks worldwide. So that there seemed to be also an opportunity for big organizations not just change their business model slightly, but also do something about their reputation and their branding. Now, the problem with all that is that many firms have only inventories and cash for 3 to 6 months. So at the beginning, and still now, we don't know how long we're going to stay in this, level of decline from the economy perspective. So as a result, what companies had to do and what they did, they had to fire and to idle workers. They had to slash dividends, investment payments. And obviously, they wanted to make good use of government supply schemes. And I have to say, if these government schemes are fully implemented and if the benefit systems work, that could be particularly good for big organizations. At the end of the day, those companies who make it through the crisis well, these are those companies that are in the right industry. So different industries are affected in different ways. They have strong balance sheets, and they can easily tap into government loans, guarantees, or other aid. So that's seems to be positive indicators. But we know that it's different for different industries. Tourism, airlines, retail, specifically clothes, are very hard hit. Other industries like confectionery or detergent, that is particularly good at the moment. Tech companies seem to do quite well. Supermarkets, healthcare. So there's a lot of, diversity in the way how the virus affects different companies. And then obviously, always when there is a crisis, there are also opportunities. So we know that more than a quarter of the world's top 2,000 firms have more cash than debt. That is a huge opportunity for them to use this cash to buy rivals, to expand their market share, to secure their supply chain, to remanage distribution. So for them, there are lots of opportunities out there. We can see China, for example, they start to encourage their state-owned firms to go global and buy distressed car manufacturers in Europe. We see car companies being approached by big tech giants to improve cooperation, to move technology into the automotive sector. We see healthier airlines like Qantas and AIG. They snap up bankrupt rivals. They snap up airport slots, and they try to acquire others who are just, start to stay afloat. But what is also very important is the private equity firms. They have mountains of committed investor cash. And if they just, start fundamentally by financially poor suppliers who are still in good shape from their business model, they may just acquire them, hold up to them, and once the markets recover, they can really make a good fortune with them. So that there are problems, but there are also opportunities, and it depends really where you are as an organization and how you can make use of them. Now, the ones that are hardest hit, I have to be honest with you, these are small firms. And the small firms, we see that in the US, for example, 54% of them, they are closed temporarily or they expect to be closed. And the major problem for them is that they have no real access to capital markets. So they also usually don't have friends in high places. They struggle with government help. For example, we saw in the US that only 1.5% of the US's aid package, which was $350 billion for small firms, has been dispersed so far. And to be honest, Britain's efforts have also been slow in that sector. We know the banks are struggling with contradictory rules. They struggle with the flood of loan applications. Potentially there's help, but it's also a question mark. Small companies, they do have chances because they're small, they are flexible. So to think about their business model, to think about, in food restaurants, can they open up takeaways or deliveries rather than having people coming in and, eating there? Retail shops, can they move to online shopping? That's a challenge, I know, but there are opportunities out there for them. At the end of the day, what they can do is they can always check their working capital. And small business are cash business. They don't have dividends. They have big finance transactions. They are relying on cash. So talk to suppliers, ask for later payments. Talk to your customers. Can they pay quicker? So we know, for example, Unilever, they are attempting to help suppliers by paying them more quickly. But obviously, again, only those who are considered important in their own supply chains. And it's also inventory management. Can you reduce inventory levels as a company and then free up cash that way? Obviously, think about making use of government schemes if that works. Talk to your banks. Can you arrange overdrafts, other financial support? But the point for small business is really, even if they manage to get a loan, the point is, how do they manage to pay it back? Because they have to work harder after the crisis to generate the additional cash to pay it back. So in some cases, it may be that they will have to shut down business as a whole. So it really is a hard time for them. So that's what I would say.
Yeah. Well, thank you. That's really, really helpful. And actually, that brought me straight on to my next question, which is, what advice would you offer startup to medium-sized businesses during the pandemic? I appreciate you touched on that just there. Have you got any additional advice that you would offer the smaller to medium-sized businesses during this time?
Yeah, I mean, especially the startups, those who have investors, strategic investors, you have to be transparent with them. You have to be honest with them. You have to tell them where you are financially. You have to have a good business case, which I hope you do, because otherwise you wouldn't have started in the first place. But you have to be honest with your major investors, what the impact is on your business, on your expectations, on your payback, on your whole cash flow forecasts. It is extremely important that they understand where you are and that you keep confidence and trust. I think that's really key. In terms of your business, specifically in startup, that is, I mean, unless you are in one of these industries that experiences a real boom, you will see setbacks, and you have to think how you manage setbacks. Do you have financial support to manage your setbacks? Can you use furlough schemes, although you may be new on the market? Would they be available to you? How do you manage your employees? Again, my recommendations is honesty and transparency is the best way forward. Don't lie to them. Don't raise expectations where there are none. Just keep it as honest and as straightforward as possible. We have seen many companies where the management has set signals like deliberately not taking up a bonus, deliberately taking cutbacks, deliberately saying, everybody has problems. We feel we should join the club, so to say. So we encourage this feeling of community rather than make it a hierarchy in which you, as the senior executive, are well off and the rest have to suffer and have to see where they stay. So I think that's very important in these days.
Yeah, absolutely. And that kind of moves me on to, on the other hand, what advice, or if it's different advice, do you offer larger to multinational organizations during the pandemic?
Yeah, as I said, they are the ones that may benefit from governance schemes. They also have, in general, good access to capital markets. They usually, they can relatively easily slash dividends slash investments, and they can restructure and reorganize the organization. They can make use of the furlough schemes, as I said. Government schemes work very well for them. And also they should see whether there are opportunities for them. Use if they have excessive cash, can they use it to strategically improve on their operating model, their business model, their market share, their market standing? There are lots of things that they can do even in times of crisis. And one of the things certainly is to look about technology. I mean, you have people, your workforce working from home at the moment. You use technology to communicate with them, also with suppliers, with customers. Can you use that in the future as a standard? Is there a way of, making, and I don't want to sound harsh, but making good use of the experience that we have at the moment, rather than just saying we go back to the old ways of how we did things before? As I said, all crises also have opportunities.
Yeah, what can we learn, kind of thing.
Exactly. And I think that's one of the exciting things when we look forward, where we're heading. So how is the world going to look like in the future when we hopefully, one way or the other, get out of this crisis? I think at the end of the day, to really get out of it, I think we need to have a vaccine. As long as we don't have a vaccine, we are in a state of ramping up and, being slow recovery. We see different countries use different approaches when and how and what to open. Companies may find the work environment different during this ramp up phase. We see the retail stores in Germany, people have to wear face masks when they're out in public. That certainly is not a pleasant experience. We see automotive companies in Germany starting to ramp up step by step, starting the production with extremely serious health safety measures. So the whole way how they work at the moment is completely different from before the crisis. So I think that's the next phase, is the ramp up phase. And then once, hopefully at some point, we will get out of the crisis completely, I think there are a few things that we will take away from it. And I think there are three main things actually that will have an impact in the future. And one of them is certainly how we organize our supply chains. I think many companies noticed that they were much too dependent on China. It's not about single source, it's about diversification, I think, in the future in terms of supply chain. It's also that the investment will drop in supply chain. I think many companies will try to move their supply chains closer to home. And in fact, new technology like robotics is actually helping them to do that. So this is an approach that has already started before the crisis. But during the crisis, the shortcomings have been obviously, and the crisis has accelerated that kind of trend that companies even, look at their supply chains much harder than before and are much more prepared to take action. It will make the global firms a little bit less profitable, but they will be much more resilient. Yeah. So that's the first thing. And the second thing, I think, is the adaptation of new technologies. I think we can really say that the planet is having a crash course in e-commerce, in digital payments, in remote working. We see more medical innovations. And what really happens is that we should make use of all the things that we learn. We should make use of the experience we have. We should not be, without critique, looking at what has happened, how we have improved, what went well, what did not go well. That would be great. But the other thing that we also see is that with the introduction of these health apps, that on your mobile, that is coming up more and more, the whole question about data privacy is getting a little bit more relaxed, and specifically countries like Germany, where people are very, very sensitive about private personal data management. With the introduction of these health apps, that may in general decrease the hurdle to adapt new technologies. So that may in general make the whole country more open to use this, and I think that would be something good to take away. And the other thing we see is the big tech companies, Alphabet, Amazon, and Apple. They just do well. Unfortunately, I don't want to say, but yes, a lot of companies do not do well, but they do seem to do quite well.
Yeah.
And my third point is really that the rise in well-connected oligopolies. And this is something that we saw before. The tech companies are an indication of companies and capital consolidating, getting bigger and bigger. And the crisis really has accelerated that trend. And also when we get out of the crisis, it's the big firms that have better access to capital markets, and that gives them an extra edge over their smaller competitors. And also there will be one increasingly big customer to that's the state, because we see the state now is playing a more and more dominant role in what's happening. And some people say the only engine of consumption for the next 12 to 24 months will be the government. So you can see already what we're having, and big companies usually fit well with big governments. So they make life simpler, they lobby well, and it's just this relationship works well. And what we see already, for example, in the US, that they kind of celebrate a new era of cooperation between politicians and big business, especially those that are considered strategic. And I think that is something that we should really try to counteract. So voters, consumers, investors should fight this idea. I personally don't want to live in a world with only very few very big companies. I like the diversity. I like the opportunities that startup companies have. And that would all be much more difficult if we had an environment like that. So yes, I think there are quite a bit of good things that we may take away from the crisis, but obviously there are also challenges.
Yeah, absolutely. And that actually covers pretty much my last question, but I'll say it just in case you have anything to add as well. What steps do you think businesses should be taking to be well prepared post-COVID-19? So you've mentioned kind of the supply chain, really important one. Are there any other steps you think businesses should be doing to be prepared post-COVID-19?
I think what we see is when companies are getting less dependent on China, they will also have less access to their innovation, which is a little bit sad because China is kind of an engine when it comes to innovation. It also, when we rely more on bigger firms, it may be harder for startups to get scale and to come into business. But I think the most important thing that we can take away from that crisis is that it has shown us how technology can help business to knit people together. And I think that is something that we should not underestimate. So those companies who have managed in the crisis to build a good bond with the customers, also with the emotionally vulnerable customers, they may really use this and consistently go this way and build on that. Not just take it as an emergency adaptation to a crisis, but really think more long-term. How can we make this experience a success in the long run, what we did so far? So I think there's a lot of opportunity in there.
Absolutely, absolutely. It's seeing the positives out of a very negative situation. I like that. That's really nice. Okay, well, thank you. That is all of my questions for today. Thank you so much again for coming on and taking part. Your insights have been amazing. You really know your stuff. I've learned a lot anyway. I'm sure other viewers will find it really helpful as well. Again, if anybody has any further questions for Gaby or any ideas for what themes you'd like to hear about next, please email me on amy.morris@talentorder.com or message me on LinkedIn. If you missed last week's breakfast briefing with Vicky Gavin, I will leave the link down below. I hope you're all staying safe and well. I'll see you next week. Bye.